one first question to every single one of you, right? To give us a better understanding of where we're currently at, right? From a macro perspective, can you please provide me kind of like an overview of where you see the key investment trends in 2025? Juan Carlos, since you have the mic, maybe you can get started.
Okay. Hello, everybody. Thank you, Guy, for having me here. Okay, 3 words: sustainability, technology, and adaptability. To start direct to the point. Sustainability definitely is still trending. I read an article from McKinsey a few days ago. They say that the last year, the investors that were investing in startups were around 56% were focused in ESG principles, let's say. So it's expected that the next year will be around 66%, 86%. So it's a lot. So obviously, we need to consider sustainability, at least to apply some of the ESG principles in our startup first. Secondly, it's about technology, AI, blockchain, or cryptocurrency, as my friend named it. It's the same. Okay, I disagree, by the way, but okay, let's talk more about this.
Disagree in public in a minute.
Yeah. and the third is about adaptability. Definitely, the world is changing a lot, as you mentioned. The GOP now is in power in the US. Definitely, is the more powerful country everywhere. Also, the interest rate is key in every single industry. So obviously, interest rate determine the return, also determine the risk. So we need to think over about that. So adaptability means we need to be ready to act, to see what is happening everywhere. The strategy change place by place. So in summary.
You want me to answer the same question?
Yes, please. But if you've got something else to share, let's go with it.
No, we'll stick to your plan. First of all, thank you for having me. Thank you, everyone, for coming and giving me your attention. It's very nice of you. My advice when it comes to investing is my focus is crypto and digital assets. So I'm going to stick to crypto and digital assets and speak about things I actually know about. Bitcoin is today nearing $100,000, and that scares people because they may not have $100,000 total in their bank account. So they're like, how can I ever afford one Bitcoin? Maybe it's too late. And my advice to those people is, and mind you, I'm not a Bitcoin maximalist, but I think it's important to start with just Bitcoin because it is still the only decentralized cryptocurrency out there. We still don't know who owns it. No government can actually shut it down. And to me, Bitcoin still represents freedom. And freedom is super powerful. I personally moved here 2 years ago from Ukraine. And as you know, Russia invaded Ukraine. And at that moment, crypto saved my life. I'm here because of crypto. Not only because the industry is global, but because the second the war started, you could not get more than 100 USD out of the bank. All the banks would not let you get more than 100 of your own dollars out of the bank. And people who I know who are buying new Porsches and Lamborghinis every month and have $100,000 Pateks and nice watches were asking me for a loan when the war started. And I'm like, you're richer than me. Why am I giving you money? And he's like, I need crypto. I need to get my family out of Ukraine and start a new life. So that's my first point. Bitcoin equals freedom. Second point is, don't be intimidated by Bitcoin's price because you need to be familiar with the concept of, well, how many, if you're very quick, raise your hands. How many are familiar with the concept of dollar cost averaging, DCA? That's really good, actually. So as you guys know, possibly better than me, dollar cost averaging is, to put it in the lamest terms, every Friday, whatever dollars or euros that were meant to go into your bank account, or at the end of a month when you get paid, you take a small sum that would have gone into just sitting in your bank and would have been eaten by inflation by 10 or 15%. And you dollar cost average the same amount of your savings, what would have been in savings in euro and dollar, you dollar cost average into Bitcoin on a weekly or monthly basis, regardless of the price. And I'll be honest, I've been personally doing this every Friday for 8 years, 7, 8 years. And I could care less where the price of Bitcoin is because next time I maybe see some of you in 2 or 3 years, it's going to be 300K per Bitcoin. Soon it'll be $1 million per Bitcoin. They only made 21 million Bitcoin. There's only so many Bitcoin that are ever going to be minted. And we still don't have massive nation states, banks, hedge funds that have actually allocated appropriate capital to the asset class. And when that wave comes, we're going to see entire governments put a percentage of their country's sovereign wealth into BTC. And I think that's when we're going to see a quick climb from where we're at to very much possibly 1 million per Bitcoin. If even the top 5 hedge funds in New York City decided to allocate 1% of their USD into Bitcoin, we might run out of Bitcoin. There's not that many Bitcoin, only 21 million. And that is a reality. And so I think, I'll pause there.
Yeah, that's a great place to put it at. We'll dive very much deeper into Bitcoin, crypto. It's a whole world. Who here has invested in crypto before?
Nice.
Paula, come on. What are you waiting for?
Very educated. I'm intimidated.
Cool, Dory. So I'd love to know what are some of the investment trends you see for 2025, right? Like we've seen kind of sustainability, AI, tech, blockchain really coming up. The obviously being very important also to be adaptable, right? And clearly for you, Bitcoin is probably where it's at in 2025. It's definitely going to be a very interesting year. What do you think, Dory?
Before I even give it to him, it's actually where it's at for 2025. If you have any money, is actually meme coins, but you have to start by explaining Bitcoin. I can't start with meme coins.
Yeah.
So, but where is it at for 2025? You fucking pay attention to meme coins.
Fuck.
So
that's where it's at.
First of all, hello to everybody, and thanks for having me here. I think the direct question is this, but I think I'll go a step backwards. I'd say I'm quite familiar with all the industries we're speaking about: startups, crypto, real estate, and the true answer is that nobody knows. Let's start from the end. Everybody has an opinion, and whatever you'll do, you'll go to the end of the year and you'll see that some of them were lucky, some of them were not. It reminds me, I was younger and I was starting to do real estate, and I met somebody who I didn't know was a real estate billionaire. I had no idea. Talking to him, what do you do? I was telling him, I do real estate and this and this. And after like 10 minutes of saying what I'm doing, and what do you do? He says, I do real estate. One word and a billion. So everybody talks and wants to show that they know in the world, and all the investment companies, and they do research. Take everything with gratitude and with being humble. That's the first thing. And the second I'd say is that apart from being quite in agreement with my friends about what they mentioned here, I'd say that the most important thing in my view would be not the specifics, but the environment we're at. So at the end of the day, we really are living quite a wild time these days. So many changes, wars, the extreme became the normal, and a lot of industries are adapting to it. And I think that it starts with really the basics of demand and supply and what is the ecosystem. If we go to crypto, for example, I'm quite with you on that, because I believe that it's an industry that has been growing in a time where you could not make a bank transfer to your own bank. Still today, in my Spanish bank, they closed my bank account because I made a transfer from a crypto-related broker. So in my opinion, if in environments like this, an industry could succeed and reach 100,000, once a new government in the US is coming and telling everybody, guys, we're going to make it legal, normal, and okay, I believe that sets the trend of where this industry, as an example, is going. So I really believe that and just giving another example of the opposite of real estate as an example from my recent 8 years of being a real estate developer in Barcelona. I'd say it easily, go to where the wind is at your back and not in your face. Doing real estate in Barcelona in the last 8 years have been very complex, because you're fighting the city hall and the government and everybody who's basically telling you, don't do it. You're the bad guy. At the end of the day, you don't want to do anything bad. You're a good person. You just want to create. But you need to understand the sentiment. So there's a really nice analogy that I know you could. There's an ant, a really small ant that's working hard, that's coaching itself, that's running, that's doing everything in this direction. But then when you zoom out, you see that it's on the back of an elephant that is walking on the other direction. So I'd say that really the most important thing is look at the big picture of where we are, which are the strong economy direction that we're seeing when we'll dip into interest rates and others, and from there go down.
And actually, still with you, Dory.
Yeah.
So, we've mentioned now so many different asset classes, so many different opportunities. So for someone who is either just getting started or just wants to make their next investment, how do you choose between so many things to choose from in the first place, right? You touched a little bit on looking at the macroeconomic landscape. Are there any other, things you look at when it comes to deciding where to put your money in?
Many, and I think that's a key question. A lot of my friends, they ask me, I want to invest, I don't know, I have 100K, I want to do something. And say, what should I do? I say, I don't know. What are you looking for? That's the first question. The fact that you have 100K as an example or something, are you looking for ongoing cash flow? Are you looking for putting your money somewhere that might be worth 10 times more in 3 years? What's your investment time? What's your risk appetite? Who are you? And a lot of people skip that phase. A lot of people see what's going on. Everybody's buying crypto. Let's do crypto. Could be great, but is it fit for you? Is that what you are looking for? And I think I'd first of all start with that, with asking myself, who am I? What's my risk appetite? What can I lose and afford to lose if I go to a risky thing? Or am I really looking for buying a very solid investment that will have zero risk if possible? So that would be the first thing. And second, I'd say really try not to listen to people who don't know. That would be a very important thing.
But how do you even know if they know or they don't know?
When you go and have dinner with your family and friends, I promise you, each of them has an opinion about the market and everything. No, you want to buy an apartment now in Barcelona? I have a friend who did that and he lost money. Don't do it. It's very easy for everybody to share their opinions, but most of them are not based on anything. So if you want to, as an example, go to real estate, invest time in studying the place where you want to play. Take the time to really understand resources, data, and things that can really, and don't just depend on what's in the buzz right now and in the hype right now. And I'd take it a step further and say, if you really want to look for something that is more than just, I'd say, a bond, at the end of the day, any investment which involves risk requires balls. And you need to take it and make that step, especially on the first time. I remember that when it comes to this, I'll just finish with that because for me, that's how I started. I was, 23, I think. And I'm an accountant originally, which is the opposite of my nature. I studied it, and the first day I understood no way in hell I'm going to do that in my life. So a friend told me about a private course of a guy who does real estate, but not theoretically, but he goes to the street and stuff. And I went to this course, and this guy, uneducated, shows you and said, at the end, we got connected. I have an apartment, which I'm not going to buy, but you go, maybe it will fit you. The price was 550 in the currency of where I lived in Israel. And when I reached the negotiation, I said, no, they already want 700,000. And he told me, don't buy it. It's not a good deal now. But I invested the time to study and understand the market. And I told him, it's still a good deal. I'm going to buy it. And my mentor, who I had no idea, told me, don't buy it. I did it. 6 months later, I flipped it for 900. But I'm not saying because I'm successful. I'm saying because at the end, you're going to hear from everybody anything. Study. Get the information you need and go with your gut feeling of what you feel like doing.
For sure. And also for me, one of my learnings when I was, I also had between 2017 until 2022, I was very deep in crypto actually. And most of the time you just look at a price and you're like, okay, that seems like a high number, right? When you really need to look at it from a very relative point of view, kind of like, and to the actual value, right? Like, for example, Ferrari cost, one whatever, I don't even know how much it fucking costs, you know, but it's really about, and then there's something else that a t-shirt may cost very little, right? But if a t-shirt costs 1,000 euros, even though it may look much cheaper, it's clearly overpriced, right? Where maybe the Ferrari is just costing you, I don't know, imagine 10,000, it's 10 times more, right? But it's clearly undervalued. There's a clear opportunity. And also during today's session, I'm clearly the most unknowledgeable here between you guys. So if I ever say anything stupid, please correct me as well. And I'm curious, Hartej, you know, what if you just have 500 euros or you just have 1,000, right? Like, where do I even get started, right?
You start with his advice. What do you expect to happen to your $500? Do you expect to make it $500,000? Do you want cash flow? I mean, this number is a little bit too low to have anything real happen. If you have $500, I don't know, go have a drink, buy me a dinner. I don't know.
I heard.
You can DCA though. I started the basics always. Savings that were not that the money that you were going to put in the bank, that after you paid your expenses, you paid your utility bill, your cable bill, and you're like, okay, this month I've got 2K extra. I say conservatively take half of it and put it into an investment class that is going to give you stable returns. And I have for 10 years told people that Bitcoin is your savings account, because you don't want your money to sit in government fiat currencies, because governments keep printing this money and they're not even telling us how many dollars or euros are in circulation. And the system keeps fucking us really hard. And so it's tough for me to look at any other vertical in the world, because none of them are giving you freedom, and it just opens up the doors for governments to fuck you even harder. Oh, you made $1 million in real estate this year? Let's do a deep audit. You're in Spain. It looks like you made this much money. 55% tax, you know? And so even if I were to look at real estate, for me, I don't know how these guys could convince me to look at investing in real estate in Spain. I would go do it in Midwest USA. I'm also a US passport holder, but I know that, you know, the returns and opportunities in America make a lot more sense. I can shield myself with different companies. Whereas in Spain, the government the tax authorities here are just ridiculous. And the government regulations are so high that it makes operating, like he said, so difficult. City hall, government, socialism, it's a problem. So,
and first of all, fiat currency, can you very quickly, just one sentence?
Fiat just means the government printed it, US dollars, euros, right? Like there was a day that you could take $100 bill from the US government and you can go to a bank and exchange it for gold. And that is now broken. There's no currency in the world that is backed by actual physical gold. And today the US government, or let's say the Federal Reserve, prints an unlimited amount of dollars without telling anyone on this earth that this is $1 divided by this many dollars on this earth, so that someone can gauge what its actual value is. We don't know. Some will say that the dollar is actually just backed by bullets, because the US government actually has a gun basically pointed at the whole world. It's the world's most powerful military, and that's secretly what the dollar is actually backed by. Plus, they control SWIFT. They're the global reserve currency. You can only buy oil around the whole world in these US dollars. They've checkmated the whole world. Saving in US dollars, to me, silly. Doesn't make any sense. So I would take my savings and I would find someone to guide you to do some investments. For me personally, digital assets, but there are some very interesting real estate investments where someone like him can say, hey, how would you feel about 10% on your money per year? How would you feel about 20%? Do you want to double your money? Like, what is your expectation? I don't think doubling your money is a fair expectation in the real world. I don't consider crypto or magical internet money the real world yet. I mean, I like my magical internet money. I like getting thousands of % returns. But in the whole real world, I mean, you won't go to any restaurant, bar, or someone importing, exporting clothing, and they're like, yeah, I do 200% a month. Like, that's not a thing. But in this crypto world, it is.
And, you know, it seems like crypto, that there's this huge opportunity, that there's all this tremendous upside, right? But I've also heard many times about the importance of diversification.
Yes.
Right? How important that is, just to make sure that in case, you know, everything goes to shit, with one asset class, maybe you're still,
Okay, so
saving your ass on the other side with maybe something else.
the beauty is that in crypto, we now have what are called stable coins. So you have USDT and USDC as the two most prominent stable coins. They're 1-to-1 to the US dollar. So for me, the first step is actually, even before you consider Bitcoin, maybe you should take your savings and go into USDC, USDT, stablecoin. It's 1-to-1 to the dollar. And I would rather hold this digital dollar, if you want to call it that, because I can now take this digital dollar and choose what I want to do in the crypto world. I can take some percentage of it and say, this is my savings in Bitcoin. Okay, that's like your savings account. Then I want to take some of it and I want to look in the Ethereum ecosystem. Ethereum is the second biggest blockchain in crypto. And we have matured so much in Ethereum that today I would suggest people to blindly buy the blue chips on Ethereum today. Blue chips include things like EigenLayer, Uniswap, Chainlink. These are companies that each have $1 billion of treasury. They have a team of 100 developers working on them. They have high TVL, they have high adoption, and I consider them blue chips. Blue chips in the stock market are like Disney, Apple, Google. So these blue chips on Ethereum are the ones that this is like my very conservative investment advice, which is it goes in order: stablecoin, Bitcoin, then blue chips on Ethereum plus Ethereum. And then the highest risk investment with the highest returns that everyone should read into and watch a video from Token 2049 by a gentleman named Murad, M-U-R-A-D, Murad. He gave the best overview of why meme coins are worth paying attention to in 2025.
And we'll dive deeper into that in one of the next sections. Okay.
Sure. We won't turn this into a meme coin talk, but we can if you want.
And we will. I'm curious. Maybe it's an absolute scam. Maybe it isn't.
It's not a goddamn scam.
Maybe we'll
buy the wrong fucking coin.
So stay tuned and we'll find out. All right. So Juan Carlos, when I said diversification, you were like, yes. All right. You got it right there. So, I would love to know maybe why is it important to diversify your investments, and whether in your career of 20 years, you have gained any timeless foundational investment principles that you apply every time you think about making any sort of investment. And if you could share any examples there, I would really appreciate that.
Okay, thank you. Just to answer a few things that we were talking a lot about cryptocurrencies, and also you mentioned Ethereum and other ones. Okay, in investment, there are a key factor. I am very financial oriented, so definitely I like to analyze business from the financial perspective, one of the factors. So this is something, when I say financial, to answer a little bit about your question now, is about due diligence. So you need to run a due diligence process. Means if you are talking about real estate, obviously you need to analyze at least market fundamentals. Means location, geographical situation, political stability. We can talk about natural disaster these days is important, and many things as well. Obviously, it's different to invest here with an interest rate of 2%, or in Latin America with average interest rate around 6%. Is completely different, obviously, because the political instability changed place by place. That said, all business are measured in some way with a specific constant is named beta. The beta will determine the variability of the price. If you have a very variable price, for example, Bitcoin was like a year ago, 18,000, right? These days more than 100. It's fantastic. If you have a Bitcoin, I wish I would, but I don't invest in something that I don't understand. I don't have financial fundamentals to back a price. When I analyze, for example, Tesla, okay? Tesla is now, how I measure business is about the beta. Beta will determine how variable is the business. That means that how risky is the business. And the risk is directly related to the return. If you ask for a very stable market, I want a zero risk, as you say. The risk is fundamental, how risk adverse you are. If you don't like risk, okay, go to the bank and deposit your money in a saving account, zero risk, cash bank probably will pay you minus something, but you know that.
And I want to say something about it because for some reason, people tend to think I need to do something with my money. There is nothing wrong with putting your money in the bank when there are interest rates like these days and making, depending where you are, 3, 4, 5%, depending where you are. It's not a bad thing having money in the bank and being liquid. There's some urgency of people to do things.
Right. It is the first fact. Yes, it's a good advice. You need to know how much money you need in case you have some urgency. Some people believe that 6 months is perfect time. If you know that you need to spend X amount of money a month, you need to save in liquid, means in a very accessible way, money for 6 months. This is some general advice. But in general, cash means that it's very liquid and the risk is zero. If you want to risk a little risk, you want to invest in something higher risk, let's say fixed income bonds. Bonds represent probably 2 to 3% average. Government bonds means it's bonds from Spain, from the US, or from wherever. The second stage is probably corporate bonds. You want to invest in Tesla debt. Okay, you can do that, Steve, if you understand the market. And you can start from there, real estate in the middle probably, average 8% of return, average, sorry?
ETFs, indexes.
Yeah, index fund, obviously. Yeah, depending on what kind of index are you looking for. But if you are talking about, for example, NASDAQ related, obviously is very technological, tech oriented. Dow Jones is more manufacturing oriented. So the risk is completely different. And the most riskier, obviously, is venture capitalists. If you invest in venture capitalists, obviously you are looking for multiples, no percentage. You are looking for multiples, 3 times, 6 times, is natural. So return related to risk. So what I look for when I decide to invest in something definitely is market fundamentals, and change by business for business, industry by industry, people by people. If I invest in venture capitalists, definitely the first factor is the team, not else. After that, scalability, market opportunity, many things. So if I look for real estate, definitely location is key, obviously, and also change by location. If I invest in Peru, my country, original country, so I will invest, for example, in social housing in this moment, because the government is backing social housing in general. But here in Barcelona, obviously, hospitality is a trending. The average occupability rate here in this country, right now in Barcelona, is around 80%, I think so. So it's amazing. You know that if you buy a hospitality, whatever you buy related to the hospitality industry, you know that your return is almost guaranteed, almost. Still, there are risks, something pandemic, for example. So you need to consider that kind of thing. So in summary, what I consider, definitely diversification is key, fundamental. So I try to balance my portfolio. Cash is fundamental. Fixed income bonus is fundamental as well, 3%. I know that is safe in any situation like a pandemic, very extreme cases scenario, but it still is a case. I know that my cash and my bonus or index bond or index fund will be very safe. But also I would like to invest a little bit, to invest something higher. So venture capital is amazing. Private equity is more complex investment, but still is amazing.
Can you explain the difference very quickly between private equity and venture capital?
In general, private equity is about invest in established companies. So it's more complicated. You want to buy, for example, market acquisitions or merging a company is related to companies that already have been established. Real estate is part of the private equity.
Not necessarily. Private equity will also build their own companies. Some of the most successful private equity funds in New York City have a team of 100 engineers in Ukraine, and they're building things from zero. Whereas venture capitalists, you will have a late stage VC fund that says, I will only cut you a check if you're already on Series E. So you've already done Series C, A, B, C, D, and now you're raising your late round. You have a big team. You now want to scale globally. Like you took over Japan's market. You have 99% of the market, and you're like, hey, we're growing, want to go global. That's a late stage VC. Not
Okay. I understand what you say, and he's right, because it's about definition. We can define whatever we want. I am defining. My school is NYU and Columbia University. This is my definition that I learned from my schools, from people I lived in New York 10 years. So this is how I define, and how my, let's say, people around myself define this kind of thing. But obviously, we can define it different way. It's natural. At the end of the day, it's not about labeling something. It's about what you consider. In my point of view, from my experience, private equity means you invest in something that have been already established. Obviously, you can invest in real estate from the scratch. You can buy a land and build a project. Still, it's private equity. You are building something from the scratch, but it's private equity. Venture capitalists, definitely, from my point of view, is more oriented to riskier investments. Something that you are investing in an idea in different stages. Could be pre-seed, seed, different stages. Sorry. Basically is that. So yes, to answer to finish my answer about your question is diversification. Definitely is important. Due diligence in different levels, in different stages, from different industries, depend on what are you talking about. And also fundamental, be very, very, as I said, adaptability. You need to be very resilient. So this is what I will consider my key factor when I decide to invest in something. I need to the way how I work is I create my mitigation plan. Basically, I know if something happens, what I will do. Other people could name that like exit strategy. If I need to sell something, if something happens, what will be my next move? This is basically, in other words, it's a business model, a business plan, right?
I choose to make my money in crypto, but then give a percentage to someone like him and say, give me conservative real estate cash flow.
I might go to crypto at the back, though.
I'll help you on the other side. But like, that's my game. I know that I will make astronomical returns that make no sense in crypto. And then I will say, maybe
know what you don't know.
Yeah.
That's
and then I'm like, maybe I shouldn't keep all my money in crypto, and I'll give a little bit to someone in real estate, right? But what people don't realize in crypto is, like I said, stablecoin is first. You can take just stablecoin and earn 5 to 10% with insurance on a bunch of decentralized finance platforms. And I would rather stay in crypto to have control over my own assets with a hardware wallet than anything else. And I think that's super important, that if you buy crypto, first of all, don't leave it on an exchange. And buy a small hardware wallet. It's $100 from Ledger or Trezor. And now you have sovereignty. You have your money in your hand. And that's kind of why I started with this Ukraine thing, because I moved from Ukraine. I had all my money. I had all my assets. I was even able to give loans to friends. I bribed the bribes to get out of Ukraine. And I'm real about this. Men are not legally allowed to leave Ukraine because of the war. And so we had to pay $7,000 to $8,000 in USDT per man to get out. Okay. And like the border guards were not going, oh yeah, I'll take euro, I'll take cash. No, USDT, here's the address. And you can go on Telegram. There was no QR code, but yeah, they gave the ERC20 address. And on Telegram, on the app, you can go and send any cryptocurrency and get cash up to $500,000 per day in Ukraine, even when the war started. And they just text you the address of some money exchange near you and you go and get it. And same thing in Barcelona, by the way. In Barcelona, you can convert crypto to cash up to $1 million per day without the government knowing. Let me know if we need a contact. I don't make any money.
Yeah.
And
you, Dory.
Cash and Bitcoin are king.
Yeah, baby. And I'm curious, go ahead, please.
Cool. You can disagree.
No.
Cash and crypto are king, period.
Yes.
And bullets.
It's
Can you give me the mic?
more than my opinion is about facts. And
These are facts as well.
if you measure, yes, of course, if you bought cryptocurrencies like many years ago, you are king these days. And also when you invest in the stock market, for example, when people invest in tech through technical analysis, means that you read a few lines, that is gambling. That is no investment. Investment means that you analyze a company, you value the company in terms of the assets, market opportunity, people behind, corporate governance. There are many factors to analyze. And you determine a price. You can pay premium because market opportunity, and people measure that with a factor, P&E. How much?
Wait, let's let him speak and then you can
How
go.
much is the value of this company in terms of the earn? That means if you earn, let's say 1,000 a year, and the market are going to pay you 2,000, that is the P/E. In Tesla, for example, these days is 60 times the earning. 60 times, okay? 4 is 6 times. Crypto, I don't know. You know why? Because there are no assets behind crypto. Yes, is supply and demand. Also, why crypto now is super high is because the GOP now is in the next year will be in the
GOP,
government.
can you
GOP
explain?
means the Republicans, means Trump.
That's not the reason.
Well,
One
yeah,
at a time.
okay, yes, agree, maybe no.
It's like one factor.
But
cool.
one of the coincidence
You're
is that
not
the day after Trump won the election, the crypto raised how much? How many percent?
Quite a bit.
A lot. The next day, coincidence? You say no, but
It's one factor, my friend.
okay, yes, could be. I don't know.
I know you don't know.
I don't know. But I am reading what is happening with the
I
market.
know. We shouldn't read what's in the news.
So,
because
also,
the news is bullshit.
If you read a little bit, yes, could be. It's depend. Also,
You can have your turn.
I
Let's
strongly
let him speak,
recommend
and then you can go.
to choose what kind of reading do you have. Means if you read New York Post, obviously you could expect some kind of information. If you read BBC News or New York or Washington Post or whatever, if you need to determine what kind of lecture do you want, and that depending on the right or left you are, if you would depend on your likes. So in summary, what it's a fact is the beta determine how variable is the price. Right now, crypto in general is close to BC. Means that today could be 100,000. This is fantastic. But who knows? I don't know. Maybe you can sign something and say, tomorrow I assure that the price will not go back to 20,000. We don't know. I don't know how to say,
Right, and Hartej,
I didn't mean to cut you off, so I apologize.
thank you for that. And also,
But I will say that.
1 second.
Yeah, go ahead.
Thank you so much, Hartej. Appreciate it. I love how it's getting a little bit, a little spicy. That's always good.
It's a discussion, my friend.
Exactly. Thank you so much. Because most of the time we've had incredible speakers, but everyone's like, yeah, I agree, great. And I love to see how there's different perspectives. And I think this is very important.
Agree, my friend.
Because there's a lot of asset classes. There's a lot of things to invest into. We're mentioning a lot of things, and we're even thinking okay, but I'm trying to understand how to capitalize on the opportunities here. I don't even know where to start now, right? But I would love for you to touch on, for someone who also doesn't understand crypto, why does it even have inherent value in the first place? And why even meme coins potentially? And now maybe we can slowly transition into that. Why should we even trust this when, like Juan Carlos says, it's backed by apparently nothing?
Okay, I'll explain a couple of things. So first of all, to piggyback on one thing that he said that is actually very interesting and important for anyone who wants to discuss the word investing is, I'm sure everyone has heard of Warren Buffett, right? Warren Buffett was a believer in Benjamin Graham's theory of investing. So anybody interested in investing, I think it's a great idea to understand the concept of value investing and what was Benjamin Graham's theory. There's an excellent book. It's like the Bible for Warren Buffett, and it's a good perspective on value investing. Intelligent investor. So he was speaking about why value investing is important. I do disagree with him that technical analysis, he said it was gambling, not unless you actually went out and got your certified market technician who knows how to read charts. Because today, if you're a $1 billion hedge fund, you definitely are employing a couple of people who can read charts, and their goal is to make a couple of points here and a couple of points there. And this is not crypto related.
Right. You're right. Just you consider technical analysis just to determine what is the right moment to enter to the market. Yes, that because the market in a daily basis is going in that way. It's very fluctuant. So obviously you want to determine when is the right moment, in the morning, in the afternoon, tomorrow, tonight, middle night, whatever, maybe in the IPO, I don't know. You use technical analysis. Yes, that. The moment you buy, you have to think in a long-term perspective.
Now, why does anything have value? Things have value because people believe they have value. This starts with the US dollar. This starts with anything. It's about belief. And when people say, well, why don't I just buy gold? People who understand the value of gold are good people to easily convince it to Bitcoin and crypto, because what is the best use for gold today? It's to dig a big hole in your backyard and then to make a swimming pool on top of it. So if you think that's a great idea, by all means. But when push comes to shove and a war starts in Spain, God forbid, you're going to have to figure out a way to get that gold. And then where are you going to go with these bricks of gold? But gold is very interesting because there is a finite amount of gold in the world. And this has been a truth for humanity for a very long time. When it comes to stocks, I personally have steered away over my decade of investing because it's hard to get your money out of the market. It's a lot more difficult to read the market because of government manipulation. And when you go to your Fidelity broker and say, I want my money today. When my father passed away, I had to pay for the funeral. He had like some 6-7 figures in one account. I needed to pay for the funeral. I went to Fidelity's office. I said, give me his money. He's dead. I need to pay for the funeral. I had to go through like 3 or 4 months of paperwork and bureaucracy and hell. And it was not cool. And this was the key moment in my life where I was like, I want to hold my money in my hands. And that's powerful.
I'd like to back you on that from aspects that, just a disclaimer, I did co-found a crypto startup 2 years ago. I'm a bit familiar about the field as well. And it's true that there is a lack of regulation for good and bad, lack of a lot of things. But let me give you the other vision of it to support what he's saying. So, is crypto not a right channel because it doesn't have enough history, enough regulation to tell you can trust it enough? I took a mortgage buying a building here in Barcelona center from a very recognized bank, came to the notary, signed the deed. 2 years later, the same bank does not respect that contract. So because it's a bank and we are in real estate industry and this, does it mean that the rules... At the end of the day, we live in a time where it's sad to say, but everything is interest of financial interest that is pushing and driving any sector of anything. That's reality. So whether it's more regulated, less regulated, innovative, old-fashioned, I can tell you the same stories about government sectors here in Spain and about others. So for me, it's even worse being a certified verified criminal on that aspect, like the ones I told you, than trying to innovate and create new environments. And that's why I also believe that if, just another word about this, if crypto survived the last 10, 15 years, starting from nothing, reaching where it was, where till today, and as I mentioned, my Banco Sabadell account, they closed it because I made a transfer from... then I think it has a very interesting future. That's my take on it.
One last thing.
Sure.
So one last thing. He asked, how does crypto have value? And you also asked me this. One thing that most non-crypto people don't look at is something we in crypto called network effects. Network effects are measured by the number of developers writing code on your blockchain every single day. And in mine, we have an investment team. We have a screen that we look at pretty much every day. It rotates on a bunch of, we collect a lot of data in the market. One thing we look at is literally how many lines of code were written that day on that blockchain, that week, that month, that year. Those developers that are writing lines of code on this new blockchain, whether it's Ethereum, Solana, Filecoin, Base, Sui, Aptos, whatever, you can look at how their GitHubs are public. They're open, and you can see how many lines of code were written that day. Those lines of code were written by people that can get a job that pays them $500,000 to $1 million at Apple, Google, Facebook, but they chose to wake up and write code on that blockchain. And that blockchain, a lot of those blockchains, they've already raised $500 million. They have a treasury of $500 million. So you look at a company like Aptos and Sui, this 2 new blockchains. 90% of the co-founding team quit their job at Facebook/Meta to build this. The majority of their employees were hired from LinkedIn, Apple, Meta, and like the top tech companies in crypto.
Why do these lines of code even matter in the first place, right?
Because
like it sounds, maybe for someone who's not in the crypto world, it sounds
those
esoteric.
lines of code represent you building and you're solving a problem. The infrastructure or a decentralized application. They're all lines of code. So you're building something on this blockchain that you think will be a business that generates money. For example, you built a DeFi lending protocol so that people can come and stake your Ethereum, and you'll give them a restaking token and give them maybe 10, 15% APY per year on their money. And I'm keeping the numbers here because any crypto platforms that are promising you hundreds of percent on your money per year, this is riskier. There is, just like any industry, there's a lot of places where you can lose your shirt. Yes, Nelson.
No, I have a question because I feel like it's interesting. We've seen the two sides of almost the kind of investment with you guys in real estate, and then we looked at crypto, the more like magic internet money, kind of like virtual thing. But I feel like there is a really interesting middle point, which is the tokenization of assets, including real estate, which kind of like solve a lot of the stuff that we've been talking about, which you're like, okay, I don't understand why is the value, but if you have a tokenized Tesla stock, then you can look at the company. If you have tokenized real estate, and if you look at the asset itself. So I wonder how you guys like kind of like see that side where it's more like an hybrid between physical businesses and assets, but brought on chain. Whether we talk, and there's also T-bills, there's bonds, there's all of this, but
to be honest, the biggest bull case for Ethereum for 2025.
Bull case is just for interrupting.
Yeah, sorry.
Like bull is when
And
people
bear.
are feeling very optimistic.
Yes.
Bearish is when people are feeling
Thank you
not
for
so.
No, sorry, I sometimes go into the rabbit hole. So anyway, thank you.
For sure.
The biggest bull case again for Ethereum in 2025 actually is what you said. It's that there is a curveball that in 2025, a large number of real world assets are going to be brought on chain, tokenizing the bonds of an entire publicly traded company. This is on the marker. And a company to look at who's on the bleeding edge of RWA, which is definitely a higher risk investment compared to the blue chips like Eigenlayer, is called Ondo Finance, ONDO. All right? ONDO is one of the most interesting companies bringing very traditional real estate and stocks and bonds on chain and on Ethereum. And this is actually one of the reasons why a lot of investors are currently saying they believe ETH is undervalued, and that in 2025, we will very likely see a very innovative ETF made for Ethereum that will have levers and offer a significantly higher APY. But I personally tend to steer away from ETFs because that's not actually holding your own cryptocurrency on a hardware wallet. It's not actually holding like one BTC or one ETH in your hand.
We tokenize ETFs.
Yes.
Yeah, we're talking about a lot of very interesting lingo here. I'm going to try to simplify it and you're going to correct me, okay?
Go for it.
So I think when you're talking about people kind of writing code and stuff like that, at least starting with Bitcoin, right? What they're trying to do in its nature is to simulate the process of actually mining gold, right? The reason gold is valuable in the first place, and please correct me, is because it is scarce, right? You cannot just, one day have, millions of gold, right? Which obviously the more there is of something, the less valuable it is. If there's just one car and there's only one of them ever made, maybe someone is going to pay 1 million euros, whereas if it just exists so many infinite times, people are not going to really care so much about it, right? And so, they tried to do this in the past in the Netherlands with tulips, but then they found out that, they didn't maintain that value because people were just planting more of them. And so up until recently, gold was that only asset that was able to really be a scarce asset, right? And so what they did with Bitcoin was kind of simulate that process of mining, right? So for you, right, verifying a transaction in the blockchain, right? So basically, saying that, hey, this transaction actually happened and just verifying that transaction, which takes a lot of computational power, you got rewarded with a Bitcoin, right? And so the interesting thing about it is that not only is Bitcoin completely limited, there's only going to be 21 million Bitcoins that will ever be created, but at the same time, every 21,000 Bitcoins mined or something like that, the value, the amount of Bitcoins that the miners actually gets reduced in half, right? So you're doing all this work, verifying all these transactions on the blockchain, which maybe we can even explain why the blockchain even matters in the first place. And now suddenly for the same amount of work, you get half of that,
Which is mathematical scarcity.
So this happens most of the time every 4 years. And the reason I invested again, even though I lost everything in 2017, I invested again in 2020 was because I knew that there was going to be this halving event in April of that exact same year. And I thought, oh shit, if this halving thing caused that crazy bull run in the last time, I'm definitely going to get in on this. I lost money for many other different reasons, right? And no, I got leverage and I did some dumb stuff.
Leverage.
Yeah,
don't
don't do that. And then the interesting thing about
I think, sorry to, but it relates to the basic expectations to make huge money from little money in a short time.
Yes.
That's the best recipe to lose it. Whether it's real estate, whether it's crypto, whether it's whatever the fuck it is, sorry. But I think we all want to, especially when we're not 70-year-olds established, you're young. You want to make a lot of money. You see, so wow, there's an opportunity. And we tend to see things as we wish to see them. Sometimes it's very clear, the red light in front of you, but you just look here because, here I can make $1 million. That's right. And I think that's a general advice that you don't go to the gym and walk out of it and you have muscles. Never in the history. You need to understand, to practice, to repeat, and then you can become Arnold Schwarzenegger.
Yes, correct. And so in the case of Ethereum, it's more so just kind of the infrastructure on which most of the cryptos are built. But most of these cryptos are just kind of, their own independent applications, and the actual coins behind them are just a way to have this accountability, right? Okay, I'm realizing that I've been out of this world for a long time. I used to actually give a presentation on this. And I'm like, what the fuck was even Ethereum? It's because I leverage. And so I'd love to, very, very quickly, for you to explain, and maybe it can be you this time, why, for example, Ethereum, which doesn't have this sort of same nature as Bitcoin has, why this one has value, and why meme coins, which sounds like this crazy thing, have value as well.
Let me answer
That is
okay. I'll be brutally honest about some of the bad things in our industry of crypto. So today there was
Carlos is excited.
So there is Bitcoin. Yeah, there's Bitcoin, and after Bitcoin came Ethereum. Ethereum, the biggest innovation was this concept of smart contracts and the ability to create your own token. The facade in crypto to date, in terms of Ethereum's tokens that have been made, the facade, in my opinion, has been that we've been saying that our industry is a software production industry. And what's shifting now when it comes to meme coins is the reality that meme coins are showing us that the industry is actually just a token generation industry. And what I'm trying to say is, in Ethereum's cryptos that have been made today, most of them are designed to screw over the average retail investor. So when the crypto gets made, the team goes and raises a seed round of capital from some VCs. The VCs are investing at 5 or 10 million valuation. And then they do a token tranche at 20, at 30, at 40. And by the time they're ready to go live with some token without a company generating maybe any revenue whatsoever, by the time it hits the exchange and the average retail user wants to buy it, it's all the VCs in the first round have already 100x'd. And this is very typical in our industry. So the VCs in our industry, because of the liquidity of a token, they can dump their token the day that hits the market. This is why investing in crypto VCs, at least historically, the ones who are token focused.
Can you explain super quickly token, super quickly? There's so many ways we can go down this conversation. I'm trying to I feel like I'm riding on this bull, and I'm like, oh my God,
Yes, that's probably the best way to put it. And after that, go home and Google.
Yes.
Ask ChatGPT. Don't make me be that for everybody.
Yeah.
Okay. But yeah, it's a different word for currency, essentially. But all I'm trying to say is essentially that it's not fair, I think, for me to give I don't know at what level this room's investment level is, but a lot of people did raise their hand in crypto. So I'm hesitating to say some things because you might be smarter than me. But, it's hard for me to tell my uncle, who reminds me of him, with all due respect. It's just they're more conservative. He owns real estate in New York City. Yeah, Bitcoin, Schmittcoin. It's not going to, right? And so I didn't convince him to go invest in any of these cryptocurrencies on Ethereum. But I do have him and all of my family dollar cost averaging into just Bitcoin and stablecoin, these two, because they can hold those assets. I cannot convince them to do anything else yet. Now, when it comes to meme coins, we're seeing a huge shift. And once again, I do encourage everyone in the room to just watch this one video by this guy, Murad, M-U-R-A-D. It's like a video from Token 2049, and it's probably the fastest synopsis of why we should pay attention to meme coins in my opinion, a relatively healthy way. And what he's saying to look for is, he's saying to buy and hold meme coins that are actually building a global community of people who are excited about being a part of this community, and they're not just pumping and dumping. And there is a handful of these meme coins right now. It started with the most popular one, Dogecoin. It's how we all learned what a meme coin is. But I mean, if you look at the top 100 cryptocurrencies, even the most legitimate projects on Ethereum have been trumped by a bunch of meme coins recently. And Pump.fun, which is like a crypto casino where you can buy these meme coins, they've outperformed OpenSea and the biggest NFT marketplaces to date completely. And I just think it's worth everybody in this room's time, since you came here, to go home and dive in a little bit into meme coins and to be looking, at what did Murad say? And you're looking for the meme coins that are legitimately building some sort of a community because of a passion that is global. And it literally could be as simple as, I'm a big fan of cats, and so are all of you. So I'm gonna hold on a cat coin. And it may sound really silly to like my uncles and conservative investors, but the returns are also astronomically high, but it's based on not scam. It's based on just this weird belief that I care about cats. And so do you.
Can I answer now?
And there's nothing wrong with that.
Okay. My point about Bitcoins is not that I agree or disagree, by the way, is I put all my asset classes in a table, and I say these ones is zero risk. This one, venture capital, is super risky for some reason. Obviously, I expect some multiples behind this investment. So you put that, you can research a lot, you can ask to GPT. It's super easy, and back your answer with facts, numbers, data, statistics, and see, okay, how many people have made some money from gambling, technical analysis, in the last 10 years in this market. 80% of the people that have practiced technical analysis lose their money. And 20% make money, and obviously they go to the market and say, this is a fantastic way how you can make money easily in a daily basis. You need to go there and take care about blah, 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 follow this graph, blah, blah, blah. I am not saying that it's good or bad. If you want to do that, go ahead. But my point is just be very aware about what happens with every single asset class, invest what you understand, and also determine if this is very safety, keep your money in a bank account, fantastic. Investment, real estate for me, from my point of view, is the best asset class for many reasons. We can talk more about that. And also venture capitalists, if I understand the people behind the idea, if I understand the market opportunity, scalability, scopability, many things. Scarcity feeling as well is amazing, fundamental, and also network effect. That is a very interesting topic. So in this table, Bitcoin is here. Very, very, let's say, being very objective. A lot of risk behind, but a lot of the compensation. If you want to take that risk, fantastic. If not, go to the bank and deposit your money and receive 2% on a yearly basis. Just that. I'm not agree or disagree. I don't invest personally. I don't invest in Bitcoin because I am truly believer in, as you said, in intelligent investor. And the intelligent investor doesn't talk about Bitcoin, by the way. He mentioned and he detailed how a stock should be analyzed in a very detailed way. And also, I want to highlight...
So Bitcoin didn't exist then, bro.
Yeah, but you can apply these basic market fundamentals to every single asset class.
Yeah, but
that is, you need to apply that. And you see, okay, how you value your asset, tangible assets. Okay, Bitcoin. Okay, I don't see. Maybe the servers. I don't know. How you manage the scarcity? Okay, the scarcity, as you say, you have some factor. How you measure a few factors. So you can apply some theories to different asset classes, and that is. And if you are very, if you want to do that, obviously everybody is free to act in many ways. From my point of view, I back my investment always in market fundamental, means financial analysis, just to start, due diligence, etc., etc., etc.
And I think it's very possible to have a value investor's mindset. So personally, I brought up Benjamin Graham.
Value investor would be someone who invests in which way specifically? So
value investors are those who are following Benjamin Graham's theory of investing, that you believe that this company is fundamentally undervalued. Warren Buffett historically bought Juicy Fruit when it was like a dying brand in a way, but he said people are always going to chew gum. And he bought a massive percentage of Juicy Fruit. He did really well. Yeah. He's good at buying these companies that he believes are fundamentally undervalued and that will be around for a long time, right? And I'm trying to apply in my way, because I think Warren Buffett was a genius, but at the same time, grandpa doesn't know what grandpa doesn't know. Okay, and I cannot teach grandpa about Bitcoin today, just like I cannot teach most of my uncles about it.
I'd like to follow up on it, because actually just this morning at 9:30 I had a coffee with a friend of mine. We're close friends. He's 70 almost, and we do business together. He's very wealthy, and he was trying to explain to me that he was talking to a friend of him, and that working 20 hours a day, that's the way things should be done. Now, on one hand, he's very successful. He proved it. But on another, I'm sitting with him and I'm telling him that's one way that things could be done. But the world evolves. And that's why I go with you and say, yes, some principles that have been 100 years ago, 50 years ago are still relevant. Yeah. But we live in a moving environment, and we need to adapt. And we need to understand that things that we were taught could be relevant for some things and could be irrelevant for others. That's why, for me, in these situations, and I've been in several. I remember I was in a family office. I'm from Israel, by the way. So I was in a family office panel, and I was speaking. And every time, and that's logical that people, that the host, they try to go into the details. And I always try to stay above on the mindset. Because at the end of the day, we're educated, and I'm an entrepreneur. That's what I know how to do. I know how to create things. If it's a startup, I know my place. I'm a 0 to 1. I'm good to creating and putting it into motion. Once it's there, I don't know what to do. That's not my place. But at the end of the day, we are taught so many things, and they are great lawyers. I don't understand anything. I can hire them. They are great accountants. I can hire them. What I control most and what will shift me, whether it's in startup, whether it's in crypto, whether it's following a disciplined strategy of somebody who 50 years ago did it, it's my mindset and understanding and being open to the shifting, moving environment we are. It could be that 20 years ago, somebody made tons of money because he was working 20 hours ago. I know so many people who work 2 hours a day and they make tons of money these days. So everything is always evolving, and whether it's a real estate industry, whether it is, it applies.
100%. And I think, and I'd love to move away now from crypto, just being mindful of time. Whether you decide to invest in one thing or another, or specifically crypto, definitely put in the time to understand it. That's probably the most important thing. Understand, blockchain technology in a way that you'll be able to explain it much better than I did, right? I think it's important to be able to understand it to a point where you could even explain it maybe to a kid, understanding behind the technology, or why even a company is valuable or not valuable in the first place. Because just purely looking at a stock price, that doesn't tell you anything. So I think that's definitely one of the most important things. Touching really quickly on real estate, you mentioned that this is one of your favorite asset classes, right? I wonder if you also believe that, right? And also, I would love to very quickly touch on how do you even get into real estate? What are the different possibilities? Because it definitely is this thing that obviously, crypto, you can definitely make a lot of money there. There's no doubt about it. You obviously have to learn about it too. And it feels that real estate is this other timeless thing where people have made their fortunes, over history in general, right? So I'm curious to know, what are those first steps? How do you get into the real estate industry? And what are the different things that are really out there? Because you mentioned something about flipping, right? For example, one thing I did was, I rented a place and then sublet the individual rooms. You can buy, there's so many things you can do. So I'm curious to know, what's your thoughts on real estate in general as an asset class, and how would you get started in this?
So real estate is a huge word that has a million things beneath it. I mean, real estate at its own is not only different by sector, but also by geography. Before moving into Spain, I was managing a real estate company in Berlin for 5 years. I remember myself telling myself, oh, finally, I'm going to Spain. I'm getting rid of the bureaucracy in Germany. And oh, did I not anticipate what I was going into? So we need to split it between geographies, which in every country, it's completely different, and between sectors. Now, probably for the, I'd say, amateur first-time investor, the most traditional, easy thing to look at is an apartment. That's the thing that all of us know, live, and where our parents and grandparents have always told us that these people will always need somewhere to live. So within it, there are a few hats. If I'd say if you go to invest first time in real estate industry, first of all, as everything, understand a lot the environment where you're at, because you could find, I'll take Barcelona as an easy example. Barcelona, I still know friends who tell me, Barcelona is cheap. Look at other places. Look at Rome, Paris, London. Barcelona will be double the price in 10 years. I heard it 10 years ago, and I'm still hearing it now. Why? Because they think so. But you need to analyze and understand. And I remember going back to the independence days of 2018, where I was in the worst moment when it caught me. We were buying buildings in the center of Barcelona, and suddenly everybody wants independence. And then you go and speak to them and you tell them, okay, I understand the heart, but what's the plan? And I say, plan? No plan. Where the money is going to come from? So there are so many elements in analyzing a real investment in real estate. So starts with the geography. If we're looking at Barcelona as an example, understand the city. Understand the city in aspects of history, of future, of what are the legal regulations that imply. As an example, a lot of people here in general would tell you, and I agree, I mean, the touristic sector in Spain is perhaps the strongest. Buy an apartment with a tourist license, as an example, rent it to tourists. Great. I know a lot of people who have it. Then suddenly the government comes and says, you know what? In 4 years, we might take the tourist license away from you. Which brings me to the principle of analyzing an investment in real estate. Whatever it is, whether an apartment, expect the unexpected. Because you need to have not only plan A. Plan A is if everything goes well and everybody is happy with plan A always. But try to understand, what if things doesn't go as expected? Am I prepared for that? Is my investment ready for that? Do I need to be liquid? Usually, and that's reality, and that's part of the beauty of it, things don't happen like we plan it. Otherwise, it would be quite boring. So you might buy an apartment and find yourself with some problems that you didn't anticipate. You might invest in a fund that does that because you're not professional. There are many ways to get into the real estate game, especially if you don't want to be professional. If you want to be passive, then try to understand what's the best way to be passive. If you want to be directly holding it or via others who know it. The thing is, it's an endless world. And like anything else, if you want to go into it, make sure you understand what you're going into. And more than that, I would say, try to see that interests are aligned. And I'll give you a few examples of that. So right now, I have a few apartments which are on sale here. And then the agent that has a buyer comes with a buyer, and we have a contract which is called an ARAS contract to sign. And this buyer, they don't have a lawyer. They trust the agent to manage it for them. And it's very common, by the way. A lot of time, buyers of apartments don't have a lawyer because they don't know. There's a nice agent. The interest of this agent is completely opposite than their interest. And I know it from the other side because I'm on the other side and I speak to these agents. Don't trust people and understand the interests. Are they aligned with me or not? If you're going to invest in real estate, take the time and the money to make sure that you cover yourself and don't trust people who might be on other side. Same goes, by the way, big funds and a lot of other things that usually, and again, I'm very cautious about it, but at the end of the day, I can tell you at least, okay, I'll make it easier, I'll feel comfortable. There's at least one fund that invests in real estate that I know, that I can tell you that the people behind it are more interested in the management fees that they are getting than the success of the fund for the people who put the money. So again, is this a good way to invest? Depends. All I'm saying is there are many ways. You need to make sure interests, understand if they are aligned with you or not. Take the time and the money to bring professionals if needed because you are not. And understand your risk exposure sector, because I come from residential real estate basically but today, from what I've experienced in Barcelona, in Spain, I shifted away. Today, I'm not touching it because I believe that there are more interesting sectors which are basically understanding what's this country good for. So tourism is a very strong thing. And another one, just as an example, because this is really my main focus, is nursing homes of elderly people. Spain is a country with the 4th oldest population in the world. Huge demand, lack of supply, a lot of government funds that go into this because Spain is in a very extreme left period government-wise. And when you look ahead, you try to be the professional future-proof. Future-proof means that I want to know that what I'm buying now in 10 years or 20 years is still going to be in the same direction. So in my opinion, these are two sectors, again, not for, I'd say, the individual who doesn't know it, but as a concept, and that you can join others in many ways that could be discussed, that I believe in this, in Spain in general, it's tourism and the elderly population.
Flex living as well is something that's really popping right now as well. Basically just co-living, medium-term accommodations.
Everything co. At the end of the day, people have limited amount of money, prices go up, which means everything needs to happen in smaller pieces for everybody to be able to join it. Yeah. So whether it's co-working, whether it's co-living, whether it's co-whatever, I'll give you another example. Trasteros, in Spain, which is basically the English word is storage. Small places of storage for each one outside is something that didn't exist in Spain or other countries when you go 10 years back, even 10 years, yeah. Everything needs to apply to the modern way of living, which means at the end of the day, smaller pieces. And you look at investing. 10 years ago, was there micro investing? Did anybody have the opportunity? 20 years ago, for sure. Join a fund with 1,000 euros? No. If you didn't have a 500K, nobody would speak to you. So the whole concept is how can we give more access to more people by creating smaller chunks?
Can I
Love
ask
it.
you a question?
Sure.
So
And let's keep this short because I really want to start.
I just want him to shed light on to continue. I was given advice, let's say a month and a half ago, from a real estate friend. And real estate's obviously not my forte, but we are actively looking to put a percentage of our fund into real estate. And each of my teammates wants to buy their first home. And they were like, yeah, I don't own any real estate. It's very typical for us people in crypto. We own nothing. Yeah. And so each of us, we all have kids and we were talking.
Maybe we should put
Yes.
something in case.
Yes. So we were talking to a friend who's nothing but focused on real estate, and he loves talking about EBITDA and everything very conservative. But we've pulled his money into crypto, and he's pulling our money into real estate. And his advice to us was, before each of you buy one home for yourself, buy 5 homes over the course of a couple of years to learn the process and get that cash flow, learn what it was like to deal with the bank, go through that process before you buy your first property. This was his advice. I'm curious how you feel about that as in general.
Maybe we can give
And
the answer.
I would love
to
your
Juan
opinion as well.
Carlos.
Of course, yeah.
And if you could also like combine that afterwards with, what are the general strategies you leverage when making investment decisions in real estate as well?
Okay. Again, just to clarify, I am not conservative in my investment. I invest in BTC, and let's say the investment is higher than probably Bitcoin, but from my point of view, is backed by people, ideas, market opportunities, etc., etc. Okay, that's it about the real estate fundamentals or market drivers. Definitely, a healthy city is fundamental, as you say. Understand the geographical nuances. Let's say that means a growing population is fundamental. For example, here in Spain, we have analysis for the next 10 years. So I know it's not. By the way, it's public data. You can go to the national statistic. INE, Instituto Nacional Estadístico. So you can see what is the projection, how the ayuntamientos is projecting to the population and the urbanization and everything related to new developments. So that will imply that the reglementation are going to change in order to attract more people to their ayuntamientos. Okay, that's it. You can classify the projection of the population and income rate per capita in the next 10 years. So again, population, financial stability means that income per capita change by city. Okay, it's different here, different. But still, I just want to highlight something important about why I invest in real estate. Firstly, it's a tangible asset. You can buy, you can touch, you can sell. It's inflation, let's say, is proof to inflation means, for example, somebody said, if you want to save your money in a bank account, don't forget that the last year, 1 year ago, the inflation rate was around 11% in this country, 10.2%. And the interest rate was around, sorry?
Official, it was probably more.
Yeah, probably. Okay, worse. In my case, it's okay. It could be worse, but
At
how
least
much?
10%.
You remember how much was the interest rate? 6%, best case scenario. So obviously, you are losing your money if you save your money in a bank account. It's clear. It's happened. So from my point of view, I keep money in the bank account because I need to save that a specific amount of money. If something happens in the coming future, as I say, 6 months for some people. For me, is other period of time. Okay. So it's tangible. Is also you can use a real estate because it's a tangible asset, like a leverage point. So you can use a real estate asset to leverage other properties. It's super common. Also, you can use, depending on your tax strategy, you can use real estate asset to, let's say, to manage your taxes in a very convenient way. You can put some asset in a company and you will pay. If you don't use that money, you can pay a minimum amount of money. You can use an umbrella company, means a holding company, to use this company like a way how you decide how you want to pay taxes, depending on what your let's say your account, yes, your strategy, money strategy. So you can use real estate in many ways, in other words. And also, considering this factor, you can generate income from real estate in 2 ways, basically. Appreciation value means that if you buy something, you expect that the price are going to increase. But you need to consider also, again, if you look at the average price in Barcelona in the last 10 years, The average price was around $3,000 square meter. If you look, it's Idealista data, so you can research a little bit. Now it's a little 5% higher than that amount 10 years ago, obviously because the crisis in 2012, 2008, 2012. But if you look closer, for example, you look at Pedralbes area. I don't know if you know Pedralbes is a very residential area. So the price basically have increased by 150%. But obviously, if you look at, let's say, Pueblo, obviously, it's different concept. Because many things, especially in Pueblo, is a very complicated area because the government or the ayuntamiento decide to apply a few regulations in that area. It's super complicated. You need basically to give up to social housing, in some cases until 60% of your area. So it's crazy. Obviously, nobody wants to develop there. So obviously, if somebody wants to develop there, obviously because the scarcity feeling, the price is super high. So when I decide to invest in a specific area, obviously I see how healthy is a market in terms of income per capita, population, how the security is also important. Depending on if you are offering your property to other people, you need to show them how secure is the city, the health services, etc., etc., etc. So this is how I evaluate market. Also, the strategy change by country by country. If I invest in right now in Latin America, because the political instability, as I mentioned somebody, obviously the government are backing in many ways housing in general, social housing. So obviously it's super interesting to invest in social housing right now in Latin America and Mexico. Here in Barcelona, multifamilies are amazing always. Flipping is great because the hospitality industry
Flipping is basically you buy the property, you renovate it, and then sell it again.
Exactly. But something interesting is happening now. This is how we are strategizing these days. Because people are coming a lot, 90 millions in Spain the last year, almost 1.5 million every single month in Barcelona. Obviously, the original population from here is moving out because it's getting more expensive all the time. So where they are moving out? To cities around Barcelona area. So for example, we are investing in Sabadell area.
Sabadell, Terrassa,
Okay.
Manresa.
Bogatel, also Torrallas, also the Maresma area in some specific areas. You need to analyze small city town by town, obviously. But this is something that we are doing now because the demand is super high. The demand is super high. A few days ago, I was talking to a real estate agency, specific people, and they say, if I want to rent a place, I am a good customer for you? No, nobody wants. You know, guys, if you want to rent a place, how easy is it to rent a place in this city? Impossible. If you want to buy a house, you are a good customer for a real estate agent? Could be, right? But if you want to sell your house, you are the king. So what in easy way, what does mean that? Is that the market is looking for, the demand is so high that all the realtors are looking for properties. So that is the answer of how healthy is this market in terms of real estate. Madrid is other obviously reality, and Valencia is other reality. We can talk more about that. But in summary, I would say I base my investment in market fundamental. We can talk much more about that, how to analyze every single market, regardless we are talking about Latin America or Barcelona.
Love it.
Do we have 2 minutes to speak
And-
about interest rates? Because I
Yeah.
think there's something
I-
to be said about
So that's gonna be the last one,
I just
and
want
then we're gonna.
I want to
go-
say one thing about connecting Bitcoin to real estate.
You have 30 seconds.
Thank you, boss. Start counting.
Still talking.
Many people don't know that there is a direct correlation between Bitcoin and real estate. In 2017, the five biggest bulge bracket banks in New York City decided that they want exposure to cryptocurrencies without buying it. So what they decided to do was to accept people's Bitcoin in return for a loan in US dollars for you to go buy your real estate. And this is something that I will not give you the details on today. I don't know what the offerings are at the current moment, but it reaffirms my belief that you should be buying I look at it as this: it is you. If you have $100 billion family office, or even 100 million, or even 100,000 of your savings, and you're in charge of that money, it is your fiduciary duty to invest some percentage into digital assets. I'm definitely not saying the whole thing should go there. It's high risk.
All in, buy the dip. Buy the dip.
But fiduciary duty means that it is your responsibility, if you're in charge of any amount of money, to put some percentage today into digital assets, starting with Bitcoin and stablecoin.
Thank you, Hartej.
And yeah, that's it. I'll stop there.
Thank
30
you.
seconds. Are we good?
I think it was 32.
I just want, because of the time urgency, and assuming that most of you will not come out of this room buying a nursing home for elderly people, to give you something a bit more practical. When we talk about interest rates, obviously we all know that we live in a time where interest rates are high now, and we were living in a time up to 2-3 years ago where interest rates were low for a long, long time. Now, if I could try to give you an advice that I can hope will serve you from that aspect, is if you buy an apartment or anything and you take a mortgage, people tend to think short term and say, okay, today the interest high, it's 2% as an example, but you take a mortgage for 20 years or 30 years, and interest rates during 20, 30 years, they change. And there is a very important thing between taking an interest rate which is fixed or variable. Fixed means that I'll take an interest rate of 2.5% today, and it's going to stay 2.5% till the day that these 30 years pass. What happens is that if you'll take a variable, instead of taking 2.5%, you'll only pay 1.5% today, because today it's 2.5%. If you take fixed, you can pay less. And what usually happens that one day during these 20 years, interest rates will be higher. And instead of paying the 2.5% fixed percent that you could have locked, you'll be 5% because we're in a crazy time like the last 2 years, and this happened to so many people. And then you can't handle the debt. So if I can give you a small advice from me is, don't try to be greedy for gaining more money on the short term. Be safe on the long term and know exactly what you're going to pay for the next 20, 30 years to not be surprised.
What is your view on 15-year versus 30-year mortgages for first-time home buyers? Because many times first-time home buyers take the 30, but they sell the home in 3-4 years because they get excited. It means they didn't build any value in the house. What do you think about that?
In my personal opinion, at the end of the day, whether you take it for 30 or 15, as long as you're flexible on closing the mortgage with no penalties that are going to kick you, it's very dependent on your personal needs. Because when usually people take it for 30 years, it's to pay less along the way. And if you take it for 15, you're going to pay higher. And I know people who take 5 years mortgage because they can afford it and they want to close it.
Building more value.
You are building more value, but I think it's a bit more complex than building more value because, at the end of the day, it depends where you are and if this market is going higher during this time or going lower. So I could tell you that in Barcelona, if you bought 10 years ago, as he said, prices are more or less the same 10 years later. So could have you done more value? Could have you done more value elsewhere in these 10 years? Probably yes. But if you come in a different time, then you would have gained the appreciation of the real estate. So I think it's a bit more complex than just defining it on the 15-30-year mortgage.
Thank you so much. And this was definitely a very interesting, a very important point to touch on. Just to wrap up, I'd love to, if each one of you could just very quickly share, their top do and their top don't for investing in 2025. Okay. And I really appreciate if you could really keep it short, punchy, crispy, juicy. Okay. So we can then go on to Q&A. Because I'm sure there's a lot of questions, lots of things we can touch on.
Okay. First thing that AI need to be in whatever you decide to invest, AI need to be there, especially in the VC world. So AI need to be applied in whatever you are investing in, if we are talking about VC. If we are talking about real estate, and obviously team, as I say, is the first factor, and market opportunity. If we are talking about real estate, definitely a due diligence is fundamental. Means analyze a market, analyze the property, the competitor analysis is fundamental as well, and other factors. Also diversification, definitely 2025, because we expect that the market could fluctuate a lot because political instability. We don't know exactly what are going to happen with it because, for example, tariffs. If U.S. applied tariffs to many markets, yesterday the news were that the tariff will be around 20% in average to everywhere and plus 10% to China. So obviously that will determine many things because probably the governments are going to decrease the value of their currency in front of the dollar. This is how people face this kind of tariffs. So that means that the market will change a lot. So need to be very efficient in a way how we manage our asset or investment. So we need to plan to, let's say, to prepare a plan. Basically, exit strategy always. I will say that. Sustainability, I will say, is a key. As I say, 80% of the potential investment in the next year will ask for ESG principles. Some of them, at least one. So also, I will say this is fundamental. Due diligence, diversification, and surround yourself for good people, for people that understand the market. If you want to invest in something, you need to understand very well what you want to invest. Real estate, investment, stocks, whatever. Read a lot. Intelligent Investor is a good book.
Yeah.
And that's it.
Thank you so much, Juan Carlos.
Yeah, what do you want?
No, that's fine. We really are up
You
on
have it
time
on?
here.
Keep it short.
What do you have? Yeah, I don't. Sorry, I always.
No, por favor.
No. Sorry.
One sentence down.
Don't. Okay. I don't know what to say. Don't
Don't listen to Hartej.
don't save time choosing the right people. It's okay?
Thank you.
All right, I'll try to keep it really short. Do buy crypto and stick with the blue chips. Stick with stable coins. Don't think you're going to become a billionaire overnight by buying some cat coin. Don't start with the cat coin. Start with Bitcoin. Start with Ethereum. That's like gold and silver. Gold, Bitcoin, Ethereum is silver. Then put a little bit in stable coin and research what are the blue chips on Ethereum. Eigenlayer, Chainlink, Uniswap. Okay, and the key part here is whatever you buy in crypto, make sure you hold the keys to your own crypto assets on a hardware wallet and have a paper wallet that has the words that back up where the crypto is. So every time you buy a hardware wallet, you get 26 physical words that can open up that wallet anywhere in the world. Just keep good track of that. Buy a safe, and be prepared for it in case you die. But hold your own keys, because if you don't have your own keys, you don't have your crypto. Don't trust anyone. Don't trust banks. Don't trust anyone. Trust only yourself. Hold your own keys. Trust your wife, maybe. That's about it. And then don't. Well, I already said the don't. Don't leave your money on the exchange. Don't be stupid.
Yep, that's a very important one.
Quickly, do is be humble, trust your gut feeling, and I do believe that crypto is going to be interesting in the next year. Don't listen to people who don't have any clue what they're talking about, and don't fail when it comes to conflict of interest to realize it. Don't, as I mentioned before, don't trust people who are going on the opposite directions than what will serve you.
Love it. Alrighty, this was an interesting conversation. Most of the time I go into these conversations and have like this perfect script. Okay, this is where it's going to go, and I really tried my best.
Exactly that, no?
But honestly, this was really, really insightful. We really got to see very different perspectives, very, very different ones, which is what it's all about. At the end of the day, there's no one clear answer on how to invest. But for me, one of the main takeaways is do your fucking research. Know where you're putting your money into. Maybe you like more tangible things because you in general like to understand them. Maybe talk to some real estate people. Go to some real estate meetups. Otherwise, you can go to Crypto Mondays here with Nelson at Norskin or whatever it is if you want to learn more about crypto. But definitely do your due diligence. And so I really appreciate your patience. Today's was definitely a longer talk than general. We'll still have a little bit of a yeah. I was constantly checking in. I saw like yeah. Thank you guys so much.